What's up guys, it's your finance boy PV Rajan and welcome back to my channel where we talk all things real estate, personal finance, and entrepreneurship. Today we're going to be talking about assignment sales. A lot of people view assignment sales as a great way to make some quick cash, but there's some absolutely brutal tax implications that can pretty much annihilate the majority of your profits. So first, let's start off with what is an assignment sale. So essentially, an assignment sale is when the seller sells their interest in a property before they take possession. In other words, it's when the seller's flipping the contract that they have with the end builder to a new buyer. So let's say you walk into a builder's sales office and you sign an asset purchase and sale agreement to purchase a condo unit. You haven't actually purchased a property, you've actually secured the rights and obligations associated with that asset and purchase agreement. There's actually no property being sold and no ownership is actually being transferred until the closing date. So in an assignment sale, you're assigning the rights and obligations associated with that contract to a new buyer who's going to step in and actually close the transaction. So let me give you an example of this. The year is 2015, you walk into a builder's office and you sign a purchase and sale agreement to purchase a 2-bedroom condo for $500,000. Fast forward to now, the construction project's almost complete, but the transaction hasn't closed yet. Now, a 2-bedroom condo in the same area is now actually selling for $800,000. What you can do is assign your purchase contract to a new buyer and charge a fee for it. So in this example, the seller decides to assign the contract to a new buyer at the price of $750,000. This would generate a $250,000 assignment fee for them, where the new buyer would step in, assume that contract for $250,000, and then close the initial contract with the builder for $500,000. So the seller must be thinking, sweet, I just made $250,000. I didn't have to get a mortgage or close this contract. This is awesome, some quick cash. Wrong. There's some serious tax implications here, and let's talk about the first one. The number one implication is going to be sales tax. So for example, when you go out shopping and to buy any type of retail good, whether it's electronics, furniture, clothing, etc., what are you paying? Sales tax. In Ontario, it's 13% HST. So similarly, with new build construction projects, there's a 13% HST that's built into the purchase price that you're paying. So when you're doing an assignment sale, you're also going to be subject to paying HST. So let me go back to the previous example that I was discussing. So you entered a purchase and sale agreement with the builder for $500,000. The builder required a 20% down payment, so you put $100,000 down on the property. So now you're going to assign the contract over to the new buyer for a profit of $250,000, but you also want to recover the $100,000 deposit that you had previously put down. So the buyer is going to be giving you $350,000 in cash, $100,000 towards your initial deposit to recover that, plus the $250,000 in profit, which is going to be your assignment fee. So here is the real killer. You're going to have to pay 13% HST on your $250,000 profit, and you're going to have to pay 13% HST on your $100,000 deposit recovery. Therefore, you're going to have to pay $13,000 in HST on your $100,000 deposit recovery, and you're going to have to pay $32,500 in HST on your $250,000 profit, bringing the grand total of HST owed on your assignment sale to $45,500. So with assignment sales, the HST is typically built into the assignment sale price just to keep things straightforward and simple. So keep that in mind. Whatever you list as your assignment sale, your HST that you owe is going to be deducted out of that amount. Like, you're not going to add the HST on top and charge it to the end buyer. However, things are going to be significantly different when it comes to a resale transaction. A resale transaction is when you're actually taking ownership of a property you currently own and transitioning it to a new buyer. So for example, if you own your current home and were to go out and sell it to a new buyer, that would be a resale transaction. The key thing to note is that there's no HST applicable on a resale transaction as long as it's residential real estate. So again, if you sell your personal residential home that you live in, there will not be HST on that resale transaction. So with assignment sales, it sucks. You are going to be assessed HST on your profit as well as your recovery of your deposit. But there are circumstances in which you can make an assignment sale and the CRA wouldn't assess HST on your proceeds, but those are going to be very dependent on your personal circumstances and your initial intentions for why you purchased the property. So typically, if you had actually purchased the property for personal use, so for example, you worked in downtown Toronto and you bought a condo downtown pre-construction so that you could live close to work. 4 years later, it's coming close to closing, and now you've been relocated to work in London, Ontario. It doesn't make sense for you to close that property and live in Toronto. Therefore, you assignment sailed it and made a profit. In that case, the CRA would not assess you with HST because your initial intention was not for business purposes. You didn't get the property under contract in order to make a profit. Big implication number 2, when you make an assignment sale, all of that profit is going to be considered business income. Not a capital gain, business income, and therefore it's going to be 100% taxable. Therefore, in the example that we've been talking about, $250,000, which is your assignment fee, is going to be 100% taxable. You're literally going to take $250K and add it to your total taxable income and get taxed at your personal tax rate. So even in a situation where you have no other income, let's say you don't have a job, you don't have interest income, dividend income, no other sources of income, and $250,000 becomes your taxable income, you're gonna have approximately income tax of $99,000 on that $250K. So taxes in Canada work on a bracket-based system. So let's say you actually make $100,000 a year in employment income. Now you have $250,000 added to that. You have a total taxable income of $350,000. You've been kicked into the top tax bracket where the marginal rate is 53.54%. So if you make $100,000 a year from your job and now you made a $250,000 assignment sale, on the assignment sale alone, based on the tax bracket that you're going to be in, that $250,000 is going to be subject to $129,000 in taxes. So let me break it down how profitable this assignment sale ends up being. You sell it for that $250,000 assignment fee. You're going to deduct $45,500 for HST. You're going to deduct $129,000 for income tax, which leaves you with $75,500 as your net profit. $250,000 down to $75,500. Huge difference, right? You thought you were making $250,000, but really you're walking away with $75,500. So now let's look at the same scenario, but it's going to be a resale. You purchased the property at $500,000. You actually closed it with the initial builder. You held on to it for 1 year, and then now you decide to list it and sell it for $750,000. Now it's going to be considered a capital gain rather than active business income. So your $250,000 is going to be your total capital gain. Your taxable capital gain is going to be 50% of that. So only $125,000 is going to get added to your taxable income. So let's go back to the same scenario. You make $100,000 per year from your job. You now have a capital gain of $250,000 total. Your taxable capital gain, which is 50% of that, $125,000 gets added into your taxable income. You're going to be paying $58,000 in taxes on that $125,000. Huge difference from the $129,000 in taxes that you paid on the assignment fee, plus the HST of $45,500. So let's summarize for you guys. When it comes to the assignment sale, HST implication, 13% HST is going to be due on your total assignment fee, as well as 13% HST on the recovery of your deposit. When it comes to the actual assignment fee itself, it's going to be 100% taxable for income tax perspective. Now, when it comes to the resale, there's going to be 0% HST assessed on the sale, given that it's residential real estate. And when it comes to income taxes, it's going to be treated as a capital gain, and only 50% of it is going to be taxable. So overall, I think assignment sales are a horrible idea. If you're in a position to actually close the property, close it, hold on to it for a year, and then put it on the market. The reason I say hold on to it a year is because there's all kinds of HST rebate implications where the builder can come after you afterwards. That's a whole nother mess. That's a whole nother video. Hold on to it for 1 year, put it on the market. It will be considered a capital gain you'll only have to pay tax on 50% of your total capital gain, and you won't have to pay any HST. There you guys have it. If you think assignment sales was a quick and easy way to make cash, think again. You're leaving a lot of money on the table by flipping it as an assignment sale rather than closing and selling the property down the road. So the only time I would recommend an assignment sale is if you're in a situation where you're unable to close the property for whatever reason, you can't get the mortgage, etc. Then go ahead and assignment sale it, get out of that deal. If you really need the money for something else that's going to potentially net you more money, then do it. But again, keep in mind with the HST and the income tax implication, you're going to be leaving a lot of money on the table. And situation 3, again, based on your personal circumstances, you initially purchased the property for your own personal use and for a reasonable reason. Now you're no longer need to live in that property. Therefore, you assignment sailed it, the CRA may let you off the hook. So I hope you enjoyed this video, guys. If you did, make sure you smash that like button. If you're not already, subscribe to my channel. We're gonna be dropping all kinds of heat content for you guys on real estate, personal finance, and entrepreneurship. So until next time.